paper money, or fiat, encountered serious competition in the internet era for the first time in centuries. When Bitcoin or BTC first appeared in 2009, the fiat ecosystem was faced with not just establishing its usefulness in day-to-day transactions, but also safeguarding the investment ecosystem it had helped to develop. Today we will try to categorize crypto investors into 4 major groups based on the overall strategy followed by them. This should help you decide what group you fall into and according to your goal if you need to change your strategy while investing in crypto. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. While you are already here, don't forget to hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. The crypto community has drawn people from all walks of life throughout the years, providing their unique financial demands while filling the holes left by the fiat economy. While the majority of the world sat on the sidelines, unable to comprehend the actual potential of cryptocurrencies, the initial wave of Bitcoin billionaires shifted investors' attention toward the nascent ecosystem. The ability to stick to what makes the most financial sense spawned numerous types of investors, each characterized by their motivation for crypto investments. There are 4 major groups of crypto bag holders' attitudes based on the overall strategy followed by investors: maximalists, hodlers, FOMOers, and traders. Maximalists. Many investors observed a real peer-to-peer monetary system for the first time when Bitcoin demonstrated its cross-border superiority after being utilized as a currency on the dark web. Following that was a commitment to continue with Bitcoin and see it conquer the centralized entities, restoring authority to the people. The term Bitcoin maximalism was coined as a result of this unwavering support for Bitcoin and the notion that BTC is the only viable substitute for the fiat system. Bitcoin maximalists have often counseled members of the community to hoard their holdings during the down market. They frequently advise buying the dip, which is investing in cryptocurrency during a period of bad market performance. And, during the previous decade, the recommended checks have increased. Maximalism, however, is not confined to Bitcoin. It has also grown widely across other cryptocurrency ecosystems. Investors and cryptocurrency fans who have dedicated years to the development of their chosen blockchains and cryptocurrencies have a belief pattern similar to Bitcoin maxis. Ether, ETH, dogecoin, doge, Shiba Inu, SHIB, and XRP are a few notable cryptocurrencies that have attracted devoted maximalists who continue to preach the virtues of their own coins. HODLers. Hodlers are crypto investors that prefer to make long-term investments. This sort of investor is unconcerned with the infamous turbulent market changes, preferring to accumulate Bitcoin tokens over time. Hodlers are present in all crypto environments and are thought to be the most resilient. The goal of hodling for novice Bitcoiners is to collect at least 1 BTC over time. Bitcoin hodlers envisage a future in which their investments pay out a return unthinkable in a standard currency context as a result of numerous halving cycles and the resulting scarcity. This ideal appears more realistic for other cryptocurrencies because investors may amass a large bag of tokens with relatively little sums of money. During bull markets, some millennials and Generation Z like to buy thousands of meme tokens in the hopes of landing the jackpot. FOMOers. FOMOers are a subgroup of investors who make the most costly blunders in investing. FOMO is an acronym for fear of missing out, suggesting worry over price changes. FOMOers have a tendency to respond negatively to any market circumstance. When the price of cryptocurrencies rises, These investors buy additional tokens in the hope that the price will climb further. This method, however, may not always produce positive outcomes. As a result, they frequently purchase the peak and sell the bottom. To break free from this attitude, one must thoroughly research the industry while ignoring the cacophony of disinformation. Furthermore, notable crypto entrepreneurs frequently advise against FOMO and urge the general public to focus on the broader picture. Traders. These are the most straightforward investors, focusing on day-to-day pricing in pursuit of profit possibilities. Traders keep a careful eye on market mood, new events, and rules to see how the markets respond. Regardless of whether prices rise or fall, traders are ready to profit from market changes by entering long or short contracts. Due to the necessity for liquid tokens for trading, traders must hold a considerable portion of their assets on crypto exchanges. The FTX disaster of 2022, on the other hand, serves as a reminder that self-custody is the best method to store bitcoins. In fact, any sort of cryptocurrency holder with the right approach may potentially make a lot of money purchasing and trading cryptocurrencies. What's your approach towards crypto trading? Let us know in the comment section below. Share your feedback on how you liked this video. See you next time. Until then, stay safe and keep investing in crypto.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.